All right, let's dive into Axis Bank's Q3 FY25 results. We've got their investor presentation and the detailed financial reports, and well, there's a lot there.
A lot to
Yeah,
unpack.
yeah, a lot to digest, really.
Yeah,
But that's why we're here, right? We'll break it down, figure out what matters, and hopefully have some aha moments along the way.
exactly. And I think what's so interesting about these reports, right, is how Axis Bank is really trying to position itself in this rapidly changing financial landscape, particularly with like all these digital initiatives they're taking. It's pretty gold stuff.
Okay, so let's start big picture. How'd they do overall in Q3? Like, did they meet expectations, exceed them, fall short? What's the quick summary?
Well, Axis Bank, and remember they're their largest private bank in India,
Mm.
had a pretty solid quarter. Their net advances and deposits, those both saw a healthy 9% year-over-year increase. And get this, each exceeding a staggering 10 trillion rupees.
Okay, so they're attracting borrowers and
Yeah.
depositors, which is, good for any bank. But what about their bottom line, right? Did that growth turn into profits?
It did, yeah. Their profit after tax, that's PAT, grew by a respectable 4% year-over-year, reached about 6,304 crores. Even more impressive, though, is their operating profit. That jumped by a significant 15% year-over-year.
Hmm. So that implies they're not just growing, they're getting more efficient too.
Right, exactly.
Which is good, especially, with some of the potential economic uncertainties out there. Now, their net interest margin, or NIM, that basically tells us how profitable their lending activities are, that remained pretty stable at 3.93%.
Yeah, stable NIM is crucial for banks, especially when you have, volatile interest rates.
Yeah.
It shows they're managing that interest rate risk effectively.
Now, one thing that really jumped out at me from these reports is like their push into digital banking, opened by Axis Bank, right?
Exactly, open. It's a fully digital bank, but operating within the traditional structure of Axis Bank.
Yeah.
Almost like they have this separate, nimble entity that's just designed for, the app generation.
So not just adding digital features, but like a whole new banking experience.
Exactly.
That's pretty bold. What kind of impact is Open having so far?
Well, it's making waves. Already accounts for 6% of their business. And get this, they're aiming to quadruple that by 2027.
Wow.
Yeah, serious commitment. And it seems to be working. Their mobile app now boasts around 15 million monthly active users.
Wow. So they are hitting that, younger demographic.
Absolutely, yeah.
And it's not just attracting users, they're actually doing business through digital channels.
For sure.
Oh.
A whopping 59% of their personal loans are dispersed digitally,
Mm.
and 40% of individual term deposits, those are acquired digitally too. Even credit card issuance, that's 89% digital now. So they're really streamlining operations and reaching a much wider audience.
It's clear that they are going all in on digital, and it
Yeah.
seems to be paying off. But they're not forgetting, the traditional market, right? That Heart Banking initiative is about reaching rural customers.
Right, exactly. Targeting rural markets strategically,
Yeah.
and it's working. Rural advances grew by an impressive 17% year-over-year, way higher than their overall growth rate.
Yeah, so tapping into a huge underserved market.
For sure. Huge potential there.
It's not just about branches and villages, though, is it?
No, they're creating like a whole ecosystem,
Yeah.
leveraging partnerships and technology to
Yeah.
reach communities that were previously excluded from, formal financial services.
Yeah, so fostering financial inclusion,
Yes.
which is a good thing. Okay, let's look at their different business segments. Retail banking seems to be a real star performer.
Oh, it is, for sure. 11% year-over-year growth, fueled by a diversified portfolio of loan products, home loans, personal loans, auto loans, credit cards. They're hitting all the major consumer needs.
So strong consumer appetite for credit, that's a good sign.
Absolutely.
And what about their SME banking? They've been focusing on that for a while, right? What are
Yeah.
the results there?
Yeah, good results. SME loans grew by a solid 15% year-over-year. But, and this is important, 73% of their SME loan book is rated SME3 or better.
Okay, now remind me, what does that rating mean again?
So that's a rating system from the Reserve Bank of India. It basically assesses the creditworthiness of SMEs. And SME3 or better, that means relatively low risk.
Got it.
So those borrowers are likely to repay their loans. So they're not just chasing growth, they're being selective.
Yeah, focusing on quality.
Exactly.
Smart approach. Now, corporate and commercial banking, that's got to be a tougher area in the current economic climate.
Yeah, it is. Corporate loans grew by a more modest 3% year-over-year.
Okay.
But again, prioritizing quality. A remarkable 90% of their corporate loan book is rated A or better.
Wow, that's low risk.
Very low risk of default, yeah. Cautious approach, which makes sense in a potentially volatile market.
Right. Totally agree. Now, they're seeing good traction in transaction banking too, aren't they?
They are. Transaction banking fees, those are the fees they earn from things like cash management, trade finance, treasury services. Those rose by a healthy 16% year over year.
So they're becoming a real player in that space.
Absolutely, a vital area that supports businesses of all sizes.
It's interesting to see how their different segments are performing.
It is.
Retail booming, but caution in corporate lending
Yeah.
shows that focus on risk management. Now, we can't talk about financial results without talking about asset quality. Basically, how well are they managing their loans?
Right. Well, the good news is their asset quality metrics look strong. Their gross NPAs, so those are non-performing assets, actually decreased to 1.46%,
Okay.
down from 1.58% year over year.
So their bad loans are shrinking.
Yeah.
That's good. What about net MPAs? Those are the ones that take into account the provisions they've set aside to cover potential losses.
Right. Their net NPA stayed stable at 0.35%, which is quite low. And their provision coverage ratio, that's the PCR, you can think of it as the bank's safety net, stands at a healthy 76%.
Hmm. Okay, so they seem to be managing risk well and are prepared for potential bumps in the road.
I think so, yeah.
Now, let's talk about their subsidiaries. How are they contributing to the overall success of Axis Bank?
Well, their subsidiaries are doing exceptionally well. In the first 9 months of FY25, they delivered a combined PT of 1,401 crores. That's a jump of 26% year over year.
Wow.
Yeah, so they're playing a vital role, really expanding Axis Bank's reach beyond just those traditional banking services.
Sounds like they're a lot more than just side projects.
Oh, yeah, they're making a real impact.
Yeah, and contributing to that bottom line.
For sure.
Okay, let's dig into which subsidiaries are really driving this growth.
Okay.
Who are the stars of the show? Well, let's start with Axis Finance. Their growth has been pretty remarkable.
It has, yeah. Axis Finance, their profit after tax surged by 20% year over year. And their retail loan book that focuses on, lending to individuals, that grew by 32% year over year.
So tapping into that demand for consumer credit.
Absolutely, especially in the retail segment.
That's great. What about Axis AMC? How are they doing?
Axis AMC is on a roll too. Their profit after tax, that jumped by 27% year over year.
Okay.
Yeah, showing real strength in managing and growing those investments. The mutual fund industry in India, that's competitive.
Yeah.
So this level of growth, it really speaks to their investment strategies and their ability to, attract investors.
Okay, so both Axis Finance and Axis AMC are doing well. What about Axis Securities? They're in that stockbroking investment banking space, right?
Yeah, Axis Securities, they're the real star.
Okay.
Their profit after tax, get this, it leaped by 86% year over year.
Wow, that's huge.
It is. It's huge. Likely driven by, more investors participating in the stock market.
Yeah.
Especially retail investors who are using, those online platforms.
Right.
Axis Securities seems to be capitalizing on that.
Yeah, phenomenal growth. Clearly doing something right to attract and retain those clients.
Yeah, for sure.
All right, and finally, Axis Capital, their investment banking arm, had to do.
Axis Capital, they saw a solid 36% increase in revenue from operations year over year.
Okay.
So they're advising on more deals, more transactions, which means, a healthy deal flow in the market. Investment banking, that's typically a cyclical business, so the strong performance, that's a good sign.
It is. It sounds like all of their subsidiaries are doing well, contributing to that overall success.
Yeah, they're not just focusing on traditional banking, they're building a real comprehensive financial ecosystem.
Right, to cater to a wider range of those customer needs.
Exactly.
Now, before we get into their digital transformation, I want to circle back to their sustainability initiatives. They've been pretty vocal about their commitment to those sustainable practices, but how are they turning those commitments into actions?
They're not just talking, they're taking concrete steps, integrating sustainability into everything they do. Setting those ambitious targets for financing projects with positive social and environmental outcomes.
Okay.
Things like renewable energy, affordable housing, sustainable agriculture. For example, they've committed to providing, incremental financing of 60,000 crores under wholesale banking to these sectors by FY30.
Wow, so they're putting a lot of money behind it.
They are.
Are they on track to meet that target?
They're making good progress, yeah.
Yeah.
By the end of FY24, they had already achieved 30,400 crores of that target.
So they're walking the walk.
Yeah, putting their money where their mouth is.
I like that. What other sustainability initiatives are they involved in?
Well, they're promoting financial inclusion, like we talked about earlier with Varda Banking, expanding access to financial services in those rural areas,
Yeah.
empowering underserved communities.
Right.
They're also really actively supporting women entrepreneurs,
Mm.
recognizing, their crucial role in economic growth.
Yeah, absolutely.
They've set a target of 25% female representation in their workforce.
Okay.
So really demonstrating that commitment to diversity and inclusion.
That's great. It seems like they're trying to make a positive impact, on society and the environment while also growing your business.
For sure.
Okay, now let's get back to their digital strategy, especially open. It's not just about attracting customers with those, fancy apps. It's about changing how people bank, right?
Totally. Open by Access Bank it's more than just a platform.
Yeah.
It's like a whole new way of thinking about banking. It's designed to be super convenient, personalized, insightful. It's banking tailored to, today's digital savvy customers.
So what does this mean for, the average Axis Bank customer? How is this digital transformation actually changing things for them?
Well, for one, it's all about convenience. Customers can now open accounts, apply for loans, invest in those mutual funds, buy insurance, even manage their finances across, multiple institutions all online.
Wow.
They don't have to go to a branch. They don't have to wait in line, no paperwork.
It's like banking on your own terms.
Exactly. Anytime, anywhere.
Okay, so super convenient.
Yeah.
But are they doing anything to make it more engaging, more
Mhm.
personalized?
They are. They rolled out a feature called One View on their app.
Okay.
And this lets customers see all their accounts, even from other banks, all in one place. So you don't have to juggle multiple apps. You get a holistic view right there.
That's clever.
It's a game changer for managing your money.
It is. So it's not about adapting to the bank's processes anymore.
Right.
It's about the bank adapting to the customer.
Exactly.
That's cool. Are they doing anything to help customers make, smarter financial decisions?
Oh, for sure. They're using AI and machine learning to provide those personalized insights and recommendations. It's like having a virtual financial advisor right in your pocket.
Wow, that's smart.
Yeah. The app can analyze your spending, identify potential savings, even suggest investments based on your risk profile.
So they are really leaning into the technology.
Yeah.
But with all this focus on technology, are they forgetting about that human touch? Banking is a very personal thing.
Right. Well, they're not abandoning the human element, they're enhancing it. They have this Access Virtual Center with about 1,700 virtual relationship managers.
Okay.
So these are trained professionals who can provide that advice, answer your questions, help you with, whatever you need, all remotely.
So it's like that hybrid approach.
Exactly, combining the digital with the human.
I like that. Okay, with all this growth and innovation, managing risk is critical. How are they ensuring they're not, taking on too much risk?
Well, like we said, their asset quality metrics are really strong. Declining gross NPAs, healthy provision coverage ratio, and they're being prudent, selective in their lending, especially in the corporate sector.
Right.
So they're learning from, those past credit cycles.
Yeah, not repeating those mistakes.
Exactly.
Yeah.
But they're not relying on just traditional risk assessment methods.
Okay.
They're using sophisticated models, data analytics to identify and, mitigate those potential risks.
Give me some examples.
Okay, so real-time monitoring of market trends, analyzing tons of data to spot red flags, using predictive modeling to assess, credit worthiness of borrowers. They also have a robust framework to make sure they're complying with all those regulations.
So innovating responsibly.
Yeah, absolutely.
Okay, I want to get into their financials now to see how all these initiatives are translating into, actual performance. Let's start with their standalone financials. Those 9 months ended December 31st, 2024.
All right, so looking at their income statement, their total income grew by 15% year over year, reaching 109,912 crores.
Okay, solid revenue growth.
Yeah.
What about profitability? How did their operating profit do?
Operating profit, that surged by 18% year over year, reaching 31,353 crores.
Okay, so making money and doing it efficiently. But how are they managing those expenses, especially with all those investments they're making, in those growth initiatives?
Their operating expenses are under control, increasing by only 7% year over year, which is pretty impressive considering, those investments in technology, those digital initiatives, things that are crucial for their future.
Right, striking that balance.
Exactly.
Okay, let's look at their balance sheet. How strong is their financial position?
Well, their balance sheet is rock solid. Total assets grew by a steady 9% year over year, reaching a massive 15,025,712 crores.
Wow, that's a big number.
Yeah,
But asset growth is only good if it's backed by, a solid funding base.
right.
How did their deposits grow?
Deposits grew at a good pace too, increasing by 9% year over year, reached 10,095,883 crores. This ensures they have a, reliable and low-cost source of funding.
So they're not overly reliant on that more expensive funding.
Yeah, that wholesale funding, which can be risky.
Right, exactly. Now, what about their capital adequacy ratio? That's a big one, right? It shows their financial strength.
Yeah, the capital adequacy ratio, or SMARR, stands at 17.01%.
Okay.
That's much higher than that regulatory requirement of 11.5% from the Reserve Bank of India.
So they're well capitalized.
Very well capitalized, yeah.
That's good. Gives, investors and depositors that confidence.
For sure.
Now, besides capital adequacy, what about their liquidity? How well can they meet those short-term obligations?
Their liquidity is strong, too. They have a high liquidity coverage ratio,
Okay.
which basically means they have enough readily available funds
Yeah.
to, meet those demands or any market fluctuations.
So they're in good shape.
Yeah, really good shape.
All right, before we move on, let's touch on their auditors' opinions. Those are important, right? Give us that independent assessment of their financials.
Right. Well, both the standalone and consolidated financial results, those were reviewed by the joint statutory auditors, M. Nissim & Co., LLP, and Casey and Associates, LLP.
Okay.
Both firms issued unmodified review reports.
Now, for those of us who aren't accountants, what does that mean?
Basically, it means the auditors, after doing their review, didn't find any major problems with the financial statements.
All right.
In simpler terms, the numbers you're looking at, those are reliable. They accurately reflect, how the bank is doing.
That's good to hear. Did the auditors highlight anything else?
Yeah, they specifically mentioned that Axis Bank adopted that revised framework on how to categorize and value investment portfolios.
Okay.
It was issued by the Reserve Bank of India,
Right.
effective April 1st, 2024.
Okay. So they're following the latest guidelines.
Exactly. It shows they're committed to, transparency in their reporting, staying ahead of the curve.
Yeah. Adhering to those best practices.
Exactly.
Good to know. Now, big picture, what does all this tell us about Axis Bank's future? Are they on track to reach their goals?
I think based on these reports, Axis Bank is a bank on the move. They're
Yeah.
embracing that digital transformation, expanding into new markets, managing risk. They're committed to sustainability.
Yeah, they seem well positioned for growth.
I think so, but, there are always challenges.
Right, of course.
Yeah.
What are some of the key challenges they might face?
Well, one big one is the overall economic environment, right?
Yeah, if India's economy slows down, that could impact everyone.
Absolutely. It could impact loan growth, asset quality, the whole banking sector.
So things outside their control.
Exactly.
What about competition? How are they positioned against other banks and financial institutions?
Well, competition's getting fierce.
Yeah.
Especially from those fintech companies, those nimble, tech-savvy companies. Axis Bank has to keep innovating, especially in that digital space.
Yeah, to stay ahead of the curve.
Exactly.
Right. And then there's regulatory changes, right? Those are a constant in the banking world.
Oh, for sure. The regulatory landscape is always evolving.
Yeah.
New guidelines all the time. Axis Bank has to be agile, adapt to those changes quickly. If they don't, they could face fines, penalties, reputational damage.
So they can't rest on their laurels.
Definitely not.
They've got to stay vigilant, adapt to change, keep improving.
Right.
Okay, before we wrap up, I want to leave you with a thought-provoking question.
Right.
Given their commitment to sustainability and their digital prowess, how do you think they'll use those strengths to stand out in, that increasingly competitive Indian market?
That's a good question.
Yeah, something to think about.
Definitely something to think about.
And it's one we'll be watching closely, as Axis Bank continues to evolve and shape the future of banking in India.
For sure.
But before we conclude, let's go back to their Q3 financials and look at a few specifics that deserve a closer look. Okay, one thing that really stood out to me was their cost management.
Mm-hmm.
They kept operating expenses pretty much flat year over year,
Yeah.
despite all those investments they're making.
Right.
How are they doing that?
Well, it's interesting. They're being strategic with their resources.
All right.
They're investing a ton in technology. Technology expenses, those are up almost 130% year over year,
Wow, okay.
which makes sense, with that focus on digital transformation.
Yeah, got to build that infrastructure.
Exactly.
So it's not just cutting costs everywhere.
No, it's about like smart spending.
Yeah, prioritizing.
Right. And they're actually finding savings in other areas to, offset those technology investments.
Okay, like where?
Well, their integration expenses, those have gone down quite a bit.
Probably from that Citibank merger.
Yeah, exactly. Streamlining operations, realizing those synergies.
Right. Makes sense.
Yeah, so they're freeing up resources to invest in, the future.
Smart. Okay, let's talk deposits. Their overall cost of deposits has been inching up,
Hmm.
but it looks like they're trying to address that.
They are. They've got a bunch of initiatives to attract more of those low-cost deposits,
Okay.
especially in the retail segment. Those savings accounts, current accounts.
Yeah, cheaper than borrowing from other banks.
Exactly. Cheaper than wholesale funding.
So what are they doing specifically to get those low-cost deposits?
Well, they've got a new savings account just for rural areas,
Okay.
tapping into that growing rural economy, promoting financial inclusion. They also launched a family banking program,
Okay.
offers like premium perks, to attract those higher value customers.
Interesting.
And they're even partnering with platforms like Flipkart.
Oh, wow, the e-commerce giant.
Exactly, for credit card acquisition.
Okay, so reaching a wider audience.
Exactly. Leverage that massive customer base.
Smart. It sounds like they're really working to uh, diversify those funding sources
Yeah,
and reduce that reliance on, the more expensive options.
for sure.
Oh.
Especially with, interest rates going up.
Right, exactly. Okay, one last thing. Their focus on specific customer segments.
Mm-hmm.
We talked about retail, SME banking,
Yeah. Yeah.
but they're also pushing into wealth management, right?
They are, big time. Their Burgundy platform, that's for wealth management.
Okay.
They're targeting those, high net worth individuals with those tailored products,
Right.
investment advice, portfolio management, estate planning, the whole 9 yards.
And is it working?
It is. Their assets under management, their AUM, that's been growing at like a 31% compound annual growth rate since 2019.
Wow, that's a really healthy growth rate.
It is. Very competitive market, so that's impressive.
So they're not just a bank for the average person.
Right. They're catering to the affluent segment as well.
It seems like they're trying to be everything to everyone.
Well, maybe not everything. Like they're being selective with corporate lending, remember?
Right, of course.
But they were building that comprehensive financial ecosystem, catering to, different needs, different income levels.
Yeah, I mean, that's how you compete, right?
Absolutely. Solidify that position as a leading financial institution.
It's ambitious, but they seem to be pulling it off.
I think so, yeah.
All right, so to wrap it all up, Axis Bank is, they're not just keeping up with the changes, they're setting the pace.
Mhm.
They're embracing digital, expanding into new markets, managing risk, and, showing that commitment to sustainability.
Yeah, they're definitely a bank to watch.
Absolutely. All right, so that's our deep dive into Axis Bank's Q3 FY25 results. We unpacked their financials, looked at their strategies, explored their vision for the future. Hopefully you found it informative, insightful. Until next time, happy investing.
Yeah.